right? So we can do that maybe, hopefully, before 7 o'clock, we should be done. Okay? So if there are no questions, we can rightly said that it's a very easy concept. So we'll just move to break-even analysis. Okay, so let me project.
Another one.
Yes, sir.
Yeah, I like, yes.
Yes, go
The
ahead.
calculations of the figures, yes, is like, yeah, I mean, like the calculations of the figures might be like straightforward and easy. But it's like, how about when it comes to making the decisions? Do we just like make the decisions based on the, like you always said from the beginning, based on the financial figures? Because here also we make about like 120 also. That, yes, it's a very big deal.
No,
But then
you're
like,
not clear.
how about the
You
time
have a
spent?
background
Do we
noise.
look at
I'm
that?
not hearing you.
Yeah, it's the network and kids are playing around. But yeah, never mind. Maybe some other time. Yeah.
Okay, okay, yeah. I can't hear. The kids are playing at the background. Okay, so right. So we go to break-even analysis. Before we go, any other question or any other remarks, please? I'm not hearing Mohammed properly because there is background noise. Okay, maybe your kids are playing. Yeah. Okay, so we're going to look at break-even analysis. We will not waste much time on this because this is a familiar concept. Lots of people know what a break-even analysis is. So we're going to go through it quickly. Okay, so break-even analysis. Okay, break-even analysis. Who can explain to us what a break-even analysis is? I'm sure for most of you, you have done it in your earlier studies. Yes? Hadigay, do you know about break-even analysis? Can you take us through break-even analysis? What is break-even? When do we break even? If you talk about break-even, what are you talking about? Hadi? Okay, right. Mariam Baji? Mariam, are you with us? Mariama? Yima Mas Job. Yima? Yima, are you with us? You call people, they don't answer you. Usman Jai. Usman, you've been very inactive today. Are you at work
Yes,
or? Yes, Mariam.
just from class. I'm on the way.
I'm getting inside the car.
Or you are inside the car? Oh, okay. Okay, all right, fine, that's okay.
Lamen. Apa nanti? Lamen.
Learn in our class.
Yes, what am I?
Hello? Yes, someone wants to talk? Yeah, go ahead. Is it so?
Yes,
Hello?
it's me. I don't know when you're gonna get this, but I mean, like,
Yes. Go
yeah,
ahead
yeah,
now. Go
I'm
ahead.
right here. I don't know if you're getting me.
Yes, I'm getting you. Go ahead.
Yes, like cost and profit analysis. Yeah, it's also like what? Yeah, I think it's also part of the decisions. I mean, but that usually talks about if condition, like if this happens. For example, if the output of the company changes, what will happen? Or if there's a change in the total sales, revenue, and expenses. or a net profit of a business. Like if this happens, what do we do? How do we react to that? That's how I understand it. I don't know.
Okay, yeah, I had you. Okay, fine. If the output changes, what happens to sales? What happens to costs? Like that. Is that what you're talking about? Okay. At some point, you can use it for that purpose, right? But what I need is the definition of break-even analysis itself. We will go into the nitty-gritties. Okay, so not wasting time. Like I said, we all hear this
Mr.
term,
Fofana,
break even. When company going to break even? Yes, Mr. Coker, go ahead.
can I try?
Yes, go ahead.
Yes. The break even analysis there, I think it includes calculating the business margins of safety, which includes the revenue and expenses. So when a company reaches break even when the total revenue and the total sales, the total revenue and the total expense are equal.
Okay, good. Yes, so in short, break-even point is the production and sales unit when revenue will equal cost. Okay, so how many units of products do you have to produce in order for your sales and your costs to be the same? Okay, this is very, very, very important in business planning. Okay, before you set up any business or before you introduce any particular product line, you need a business plan. Okay, and one of the key input to that business plan, Coca, can you mute yourself, please? One of the key inputs to that business plan is a break-even analysis. Okay, so like I said, before you go ahead in the production of any product line, you must do this. Okay, you must do this. So it's really, really important that you calculate your break-even analysis. Okay, so you must know how many units you have to produce in order for you to be at equilibrium. That's in order for your revenue and your cost to be the same. If you know that, naturally you will know how many extra units you have to add in order for you to make profit. The ultimate objective of any business is to maximize profit. Okay, so but first you have to know your break-even point. Okay, is that clear, everybody? So, like I keep advising my students, you could use this to help a lot of these new startups, business startups, to help them. If somebody say, if a friend tells you or a relative tells you, okay, I want to go into this business, and I understand that you are studying accounting, you are studying accountancy at the university, can you advise me? The first thing you should do for that particular person is to calculate his break-even point for him. Okay? Because if he just goes in the business like that, not knowing that, for example, if he makes 1,000 units, his cost and revenue will be the same. So if he goes ahead and produce only 800 units, is he not wasting his time? Because he's not going to make profit. Okay, he is definitely not going to make profit. Okay, so they give it. So the concept of break-even analysis, like I said, is very, 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 very important. Okay, so break-even, like I said, is the point where all our revenues will equal to our total cost, so that no profit and no loss is made. Okay, very important, like I said, for business planning. And usually, new businesses don't break even until around about their second year or third year or fourth year, depending on the nature of the business. But some businesses can even break even at their first year. Okay, so it all depends on the nature of the business. Okay, so these are some of the functions we look at. Before you calculate your break-even point, which is your fixed cost divided by your unit contribution, you of course have to know your unit contribution, and we are stars, we are experts in calculating our contribution. We know that our unit contribution is the unit selling price less our unit variable cost. Our total contribution will be like that, and so on and so forth, so that we can be able to use our break-even point formula, which is fixed cost divided by our unit contribution. Okay, so let's quickly look at our break-even chart. Okay, break-even chart. So there are two, the basic chart and the profit volume chart. Okay, so we're going to go through them quickly. So the basic chart shows two axes, of course, the y-axis and the x-axis. The x-axis records what? The sales or the production units, whilst the y-axis records what? The cost and the revenue. Okay, so let's look at the lines. The sales line will start from the 0 point here, and it goes all the way linearly, whilst the fixed cost line will start somewhere along here, okay, and then it will remain constant throughout. And of course, the total cost will start from where the fixed cost starts, and then it will go linearly also, because after the fixed cost, the other part of the total cost is the variable cost. So that's why this line also goes linearly, just like our sales line. Okay, so where our total cost line intersects, where our total cost line, as you can see, where it intersects or where it meets our sales revenue line, it's called our break-even point. Can you see? So this is the point. So if we extend it to the quantity, so whatever quantity we have here at this point is our break-even point quantity. Okay, is that clear? For example, if this question relates to bottled drinks, or let's say orange drinks, okay, canned orange drinks, right? So the unit of the drinks will be on the x-axis here, whilst the cost and the revenues will be on y-axis. So let's say where it intersects is the 450 units. So the 450 will be our break-even point. So you could calculate break-even point, and you could use your graph to also find your break-even point. Is that clear, everybody? Okay, is that clear? Hello?
Yes.
Okay, so let's move. So the profit volume is similar to the first chart, but this one is only considering the profit element and the loss. So at the bottom of the line here, of the break-even point, is the loss, whilst at the top of the line is the profit. Okay, so the total profit line starts from the fixed cost element, and of course, where it intersects here is the break-even. Okay, so this is showing it. is a subset of the main chart, but this looks at it from profit or loss view. Okay. So this is a break-even question on a poultry business, which I'm going to give you as an assignment to do. Okay, you're going to look at it as an assignment. Okay, we know the concept of break-even is very, very easy. So you're going to look at this and do it as assignment using your Google Sheet. Okay, using your Google Sheet. So you're going to, all the variable costs are stated and all the fixed costs are stated. So look at this column here. You have variable costs, you have fixed costs. So what you need to do is, of course, you follow these requirements. So it says, advise the MD of Carnegie to ask the number of bars to produce within the specified period to break even. Okay, so you need to calculate that. To justify your above answer, provide a profit statement using the break-even quantity and what is the margin of safety. Okay, so the third part is what is the margin of safety. Okay. So do you understand this question? Please try to do it as an assignment and submit it. What is today? Today is Wednesday. Submit it latest end of the day, Monday. Okay, latest 4 p.m. on Monday. Okay, Karamo, can you please put this on the forum? So this will be part of your assignment. Is that clear? Karamo, are you with me?
Yes, I will take note, yes.
Okay, good. It's a very simple one, but I want you to do it properly. Okay. So the best will be try to produce this chart on your spreadsheet. So type it out and then do your calculation on it. Okay. So please take note, type this table out on your spreadsheet and follow your question requirements and do the required calculations using formulas. Okay, very important. Okay, so let's proceed. What are some of the limitations of break-even analysis? Once costs and revenues have been determined, it is usually assumed that they will all have a linear relationship. Okay, just like we've seen in a chart, linear relationship means if it starts growing, it grows linearly. You know, which in real life does not obtain. Okay, but these are all tools that helps us to determine. You know, these are some of the issues with them. So fixed costs will be constant over the relevant range. So it also assumes that fixed costs will be constant, and sometimes fixed costs can become, you know, step costs. So it can go up sometimes, and sometimes it can go down. Okay. It also assumes that variable costs will vary in direct proportion to the volume. That's the linear thing we are talking about here, which is not always the case. The selling price will remain unchanged. So by using it, you also assume that the selling price keeps changing. You know, especially in the Gambia, you know, you go to the market today, they'll tell you we sell soap for $25. Tomorrow you go there, it's $27. Okay, so like that. The efficient and productive force remains constant. So it assumes that the productivity of the workforce remains unchanged, which is also not the case. Okay. So break even, how do we apply break even in real life? Very, very important. Like I said, it's very useful input to your business plan development. You know, and as accountants, you can do a very, very good for clients, and you know, you can get good money. I know somebody who used to develop business plan for businesses, these small businesses, like when small businesses want to borrow money from the bank or from microfinance industries, they require them to produce what? Business plan. Okay, so you could easily do a business plan. You do your write-up. You know, there are various ways of doing a business plan. You could write about the business that is going to do. You talk about the market of the business, where the business is going to be located, what are the customers that they're going to target, you know, what will be the market price for the product. You can do a budget for the business. What will be the revenue budget, what will be the cost budget. And of course, you can do a break-even analysis for the business. If the business plans to produce certain number of, certain quantities of a product, when is he going to break even? Because if you do that calculation, before you in fact go to the business, before you start the business, you will know that if I produce this number of, this quantity, I will not make profit, I'll break even. Or I can, because at the break-even point, when you are less than the break-even quantity, then what's going to happen? You're going to make losses. And if you produce more than the break-even quantity, that's when you can make profits. So by calculating your break-even point, you'll be able to know how many units of the product should I produce in order for me to make profit. Okay, very important. Okay, so it's very, very important. It assists in decision making to choose between products and you know, to choose between various product mixes. Should I produce mango juice, or should I produce melon juice, or what? Or should I produce both of them, like that? So all this you know, information will help you to figure those out.
It's 19 hours.
And of course, it's very, very useful for evaluation of profitability of a new business and the product lines. Okay, so we go further. What is a margin of safety? Okay, when you look at our break-even chart here, okay, can you see it, everybody? Can you see?
Yes, we are seeing.
Yes.
Good. So the margin of safety is the area between the break-even point and the maximum sales the business can register. Okay? For example, if you intend to produce 1,000 units, that means your capacity to produce is 1,000 units. If you produce 400 units, for example, you will break even. So your margin of safety is from 401 to 1,000. So if you produce 401 units of that product up to 1,000, you're going to make profit. So margin of safety means the area or the quantities you're going to produce that will earn you profit. So anything before, any quantity you produce before the break-even point, are you going to make profit or losses? If, for example, our break-even point here is 400, if we produce 399 units, are we going to make profit?
No, we are not going to make profit.
No, no.
We are not going to make profit. If we produce 399 units, we are not going to make profit. If we produce 400 units, our revenue will be equal to our cost. So that means we will break even. What about if we produce 401?
Then we start making
Profit.
That's
So
profit.
from that 401 to the maximum sales capacity to the 1,000 in our example here is what you call our margin of safety. Okay, is that clear?
Yes.
Yes.
Okay, good. Good. So, right. So the margin of safety, like I said, is the area between the break-even point and the maximum sales. Okay, this is the area that the company can operate in any and be certain of making a profit. So this in any quantity you produce within the margin of safety area, you are going to make profit. And the formula, of course, accountants like formulas too much. The formula we use to calculate margin of safety is, the margin of safety quantity minus, the maximum sales, MS is maximum sales, okay? The maximum sales, actually this should have been different. The maximum sales less the break-even point sale divided by maximum sales multiplied by 100, okay? Is your percentage margin of safety. Okay, good. So let's look at break-even point for a multiple product. What we have just looked at now is break-even point for a single product, okay? A break-even point for a multiple product is what we're coming to look at. So the formula is the same when you look at it, but then there is a difference in the denominator. The numerator is the same, which is the total fixed costs, but then instead of divided by contribution per unit, it is what? Divided by weighted average contribution to sales ratio, okay? It is divided by the weighted average contribution to sales ratio, okay? So the weighted average contribution to sales ratio is the total of all CS ratios, okay? CS ratio is contribution over sales, simply. The contribution we usually calculate, which is the sales less the variable cost, so that contribution over sales is what you call your CS ratio. So if you weight your CS ratio, for example, you're dealing in 3 products. The first product has got a market share of 30%. The second product has got a market share of 20%, whereas the third product has got a market share of 50%. So the weighting for the first product will be 20%, the second product will be 30%, and the third product will be 50%. So when you calculate your CS ratio, okay, for each of the product, you multiply by its market share, is what we call weighted average CS ratio. Is that clear, everybody? And the weighted average CS ratio is only used when you are dealing in multiple products. The person you are advising wants to do 2 or more products. So if the person wants to do 1 product, then you're fine. You can just use your contribution over, you can just use your fixed cost over contribution per unit. Okay, is that clear? Is it making sense?
Yes.
Okay, good. So let's do this example, and that will clear it. So we do this example and we'll call it a day. Then when we meet on Friday, we're going to look at relevant cost and ordering process. Okay, relevant cost and either to accept or reject an order. So those will be the 2 topics, and we'll be done with accounting for short-term decision. Okay. So can you please screenshot this question before we do it? So bear me out. I'm sure we'll do this within 10 minutes, and we are all done for today. Even myself, I'm tired. To be honest, I've been working since morning. I've not gone home, and I've not eaten and stuff. So, but let's just be here so that we can complete the syllabus and take our exams. Is that okay? Okay. So,
Yes.
yes, that yes is not very strong. Who is that, Traore?
Yes.
Are you tired? Are you already home? You must have eaten your
I'm at the office.
You are at the office. So you are just like me.
Yes.
You ate only bread, huh?
Yes, definitely.
And the trouble is, if you go home, you still have to eat your rice. That's the trouble.
Exactly. Closing to even strong. You having bank reconciliation.
Sorry?
So I'm reconciling a bank.
Okay, you're doing bank recs. Bank recs are interesting, huh?
Yes. Yes.
Okay.
I guess
You
after
work
class
for
I'll continue.
you work for a big company?
After
Africell, okay. Okay. You must have so many banks to do their reconciliation.
yeah.
Okay, but you have a software that you use for your bank recs, yeah? Or you use Excel?
You use Excel.
Ah,
But the
very
software,
good.
we export the data from the software. Then we get all the data from the software and we have the printed statement, bank statement from the bank. So we
And you
reconcile.
tick.
So you just
Oh,
reconcile, yeah, we take with
that's
Excel.
that's a big primitive. Which accounting software are you using?
So great.
Corporate. Oh, okay.
So
Okay.
great, so great.
Or Socrates or whatever you call it. Okay, fine. Okay. Yeah, it's good. Different accounting softwares have got different approaches to it, but what is important is to do it properly. Okay, good. So let's look at this question quickly. Time is running out on our part. So example 9, beauty company. Can you make sure you screenshot this, please? Beauty company makes 2 products, nail polish and lipsticks. Nail polish sales make up 30% of total sales. Okay, that means nail polish have got a market share of 30%. And their variable costs are 45% as a percentage of sales. Variable costs are 45% as a percentage of sales. If that is the case, then that means sales will be 100%. And what will be the balancing figure? What will be the balancing figure? What will be the balancing figure? The sales minus variable costs will give you what? The contribution. Isn't it? Okay, so lipstick sales are 70% of the total sales. So that means lipsticks have got a market share of 70%. Market share depends on the how to call it, the amount of sales the product is registering. Is what we call market share. 70% of the total sales, and their variable costs are 40% as a percentage of sales value. Okay, so the same thing. If variable cost is 40% as a percentage of sales, if it is a percentage of sales, then that means sales is 100%. And as such, the contribution will be the difference. Total fixed costs are 400,000 for the company required. What is the break-even level of sales revenue for the company? Okay, so what we're going to look at, we're going to calculate break-even point for these 2 products. Okay, so it's going to be a break-even analysis for a multiple product. So as such, we need to use our CS ratio. So we need to use our fixed cost over CS ratio that is weighted. Fixed cost divided by our weighted CS ratio. Okay, so this is what we're coming to do. Let's do it quickly, and we call it a day. Okay, so let me just project this. Start a new tab. Okay, so I'm going to add a new worksheet, and I'll call it EG. EG9, example 9. EG9. Okay, so the name of the company is called Beauty Company. B-A-U-T-Y. Beauty Company Limited. Okay, so we're supposed to calculate the break-even. So we're supposed to calculate the break-even point two products. And what are these two products? Nail polish. Nail polish and lipsticks. Okay, these are ladies' products, yeah? Nail polish and lipsticks. This is not for us men, it's for ladies. Okay. So you could you know, use this example to go and you know, make money for this fashion shop, and there are lots of them there. Hadi Jallo, you know you can do that, Hadi? Hadi S. Jallo, are you with us? Mariatu Fainke. Mariatu, are you with us? Musa? Nyima Mas Job.
Yes, Governor.
Yes, Musa. I said, do you know that you could use this example to go and advise those in the beauty industry, the ladies? Or you are not the right person? Does it have to be ladies? Huh?
I'm not the right person.
You are not the right person. Why? Of course, you can be the right person. Okay, so the break-even point. Sorry? Mr. Saul, yes?
I mean, he's not.
He's not the right person. Okay. It may be the likes of Hadi, Horeja, Mariatu, Nyima, and others that can be able to do that. But still, even men can advise women, isn't it?
No, he's my.
Huh?
He's my chef. He might just go there and tell them, you know what, close this thing and then do something good.
He's a chef. Okay. Okay. That's right. Okay, so let's proceed. So we're going to calculate our break-even point for nail polish and lipstick products. Okay, so those are two products, and as such, we need to know our total fixed cost. We need to be able to calculate our total FC, fixed cost. We divide that by our, so total fixed cost is easy, it has been given to us. But we need to calculate our weighted, average. We need to calculate our weighted average contribution to sales ratio. Okay. Our weighted average contribution to sales ratio. So this is what we need to calculate our, break-even point for nail polish and lipstick. That's what we need. Okay, so now we know that our total fixed cost is given to us in the question as 400,000. What we need to calculate is our weighted average CS ratio. But before we can calculate our weighted average CS ratio, we need to calculate our CS ratio for each of the product. We weight it, okay, and add them together. That will give you your weighted average CS ratio. So very easy. The concept looks big, but then it's very easy. So let's start with nail polish. Nail polish. Okay. Nail polish as a product. First thing that we need to calculate for nail polish. What is the first thing that we need to calculate for nail polish? We need to calculate its CS ratio, isn't it? No, yes. So how are we going to calculate the CS ratio for nail polish? CS ratio is the same as contribution over sales. So that means we have to find our contribution, we have to find our sales, and divide our contribution by our sales. Okay? So in this question, we have not been given numbers as our variable cost, as our sales figure, and contribution, but we have been given percentages. So simply, we can calculate our CS ratio. So in the question, it has been mentioned that, okay, where is the question? Sorry. Okay, it says beauty company makes two products, nail polish and lipsticks. Nail polish sales are up to 30% of total sales. So we all agreed that 30% is talking about the market share, and that is going to be used in the calculation of the weighting. Okay, is that clear, everybody? The market share, you always use that in the calculation of the weighting. Okay, and their variable costs are 45% as percentage of sales value. So if the variable cost is 45% of our sales value, then that means our sales will be 100%. Simple. So we say 100%. Okay, let me make them. Let me first make it percentage. I just format it to percent so that once I type, then it becomes easy. So we're going to say equals 100% minus what? If our sales, let me just do the formula so that it doesn't confuse you. So we want to calculate our CS ratio. So to calculate our CS ratio, we must first find our contribution. So our contribution is equals to sales minus variable cost. Okay? So our CS ratio is our contribution, which we have calculated by using our sales minus variable cost. Okay, we divide that by our sales. Okay, so that gives us our CS ratio. So in order to do that, we agreed that if our variable cost is 45% has a percentage of sales value, then that means our sales value will be 100%. So as such, our contribution will be 100, which is the sales, minus our variable cost, which is 45. So contribution will be equals 100 minus, so I just put it here, just next to it, equals 100 minus 45. So that will be 55. So 55 over 100 multiplied by 100 gives you what? Okay? 55 is our contribution. Our contribution to sales ratio will be what? 55 divided by 55, our contribution divided by sales, which is 100 multiplied by 100, gives you what? Equals
55%.
0.55 divided by 100 divided by 1, of course, it is 100 multiplied by 1 gives you 0.55. If you turn that into percentage, is 55%. Okay, so our CS ratio for nail polish is 55%. Okay, now what is our weighted average CS ratio for nail polish? Our weighting or our market share, for nail polish is how much? What's the market share for nail polish? what's the total nail polish sales as a percentage of the overall sales? It's what we call market share.
30%.
30%. Excellent. So that's 30%. So that one also. Okay, so we have 30%. Okay, so now if we have to calculate our weighted average, I'll make I'll abbreviate it, weighted average CS ratio. Our weighted average CS ratio will be our CS ratio, which is 55%, multiplied by our market share, which is 30%. So we say equals 55 multiplied by 30 gives you. So we're going to use the same format here. So that gives us 16.5%. Is that clear, everybody? Is that clear? Okay, so quickly we're going to copy this and I use the same thing for nail polish. It's almost Maghrib time, so we can finish. Sorry, we're going to use the same thing for lipstick, not nail polish. We've just completed nail polish. So lipstick. Okay, so lipsticks, we're going to calculate our CS ratio, the same thing. So for lipstick, it's what's the variable cost as a percentage of sales? What's the variable cost as a percentage of sales?
40%.
40%. Okay. So we use 100 minus 40%. Okay, to get our 60%. Okay, so our contribution to sales ratio will be 0.6. Okay, 0.6 multiplied by 1 divided by 1, which is 60%. Okay, is that clear, everybody? Okay, so our CS ratio for lipstick is 60%. So what's the market share for lipstick?
70%.
70%. Okay, so we have 70%. The more we do that, you see the contribution to sales ratio multiplied by the market share, it has automatically changed to 42%. Okay, is that clear? So the weighted average CS ratio for nail polish is 16.5, while the weighted average ratio for lipstick is 42%. So what's our total weighted average? So total weighted average. So our total weighted average will be this 16.5% plus 42%. And that gives you 58.5%. Okay, is that clear, everybody? Now, we already know that in the formula, we need our fixed cost divided by our total weighted average CS ratio. So we already got our total weighted average CS ratio. Now we're going to find our break-even point. So I just bring that here, equals, click. So that gives us our break-even point for nail polish. So we're going to do the formula here. We say equals, our fixed cost is how much?
400,000.
400,000 divided by what is our total weighted average CS ratio?
That is 58.5.
58.5. Okay, so that's exactly what we did. So we format it. That should give us $683,760 US dollars. Okay? Or 683,000. If we round this up, then we can, it will be 683,761. So this is the weighted, this is the total break-even point for nail polish and lipstick. Okay, I hope it's clear, everybody. Okay, any questions? We need to wrap up. It's already Margaret. It has been a very long class. Do you understand it? Please, if you don't understand it, let me know, then I'll go over it before we break. That's why I'm here. Is it clear, everybody? You know how we arrive at our break-even point? I need answers, please. We need to start. I need answers. Karamo, is it clear?
Yes, my area is clear.
Okay. Ibrahima Drame. Ibrahima, you've been very quiet. Do you understand? Or is he gone already? Madeline, is it okay? Everything, any questions, please? Maria too? Koka?
Yes, it's
okay, fine. So once I get confirmation from some of you that it's clear, I think it's clearly explained. And in case you find it difficult understanding, please go back and play the tapes, and you will get a full explanation of it. So thank you so much, and it's my pleasure having you.